Hi, I'm here with Bonnie Marlette from Security National Mortgage, and Bonnie and I have worked a lot together, and she is very knowledgeable in the mortgage department. And I just thought we'd have a, quick Q&A, and I'll ask her some questions, and we'll bring you some information. Bonnie, they've been telling us, the Fed, that they are going to lower interest rates. So what does that mean for mortgage rates? Because it doesn't always follow.
Yes, that's a great question. Historically, the data has shown us since 1981, the Feds typically use the federal funds rate to impact mortgage rates. If we think of an analogy for a car, speeding up the car with gas and braking to slow it down, the Feds will lower the rates to speed up the economy and increase rates to slow the economy down.
That's interest rates.
Yeah, well, the Feds will change the federal funds rate. That's the rate at which the banks lend each other money. They're able to change that, and then how that impacts mortgage rates. So historically, those have been connected, where they lower the Fed's rate, and then mortgage rates will also follow suit.
Right, but not so much recently.
Right.
So, okay.
So, however, there's talk about the markets kind of have PTSD from the last couple years of the Feds doing that, and it hasn't had that impact. And so now the markets are acting independently. So that's why you see the federal funds will lower the rate, and then the mortgage rates don't go down.
Okay.
At the time, the Feds were saying that inflation was transitory, which means it was temporary, it was just not long lasting. We know now for a fact that inflation is not transitory.
It's here. It's here. So now we all have PTSD. Okay, Bonnie, I know you don't have a crystal ball, but what are the expectations we should all have for mortgage rates going forward?
Yeah, we're hearing that we may expect about a quarter drop in interest rates, maybe towards the end of 2025. So certainly not what we have all been hoping for.
Mm-hmm.
There is another school of thought that it's possible, if there was some structural change, something that spooked the markets, that we could see a larger drop, possibly into the mid sixes.
Okay. What is that structural drop or structural thing that could happen?
Yeah, so just like a pandemic, for example, or
you know what that's like, right?
Right, something big. Right. I know that one thing that's looming out there is the $3 trillion that our taxpayers have that's due now.
And tell us about that.
So when Biden passed the Inflationary Reduction Act, that was a $1.2 trillion spending bill. And so in order to, we had to borrow that money. It was borrowed against a short-term treasury. So it was a 3-year treasury note that was borrowed. And that's now due. That's $3 trillion that's due now. 2 different vehicles for borrowing money is either bonds or treasuries. Bonds are long-term. So at the time, bonds and long-term mortgage rates were at an all-time low, and that money was borrowed on a 3-year treasury note, which we don't quite understand why that was, but that is something that's kind of looming now that we'll have to get dealt with.
And that has to get paid back.
Mm-hmm.
Gotcha.
Yeah.
Okay.
So that'll be something to watch for, but I would say buyers just need to continue on, and we all know the cost of waiting. Have you heard that?
Yeah, so right now, what should buyers do? Do they buy? Do they wait? What's your advice to them as a mortgage lender?
Yeah, so we always break that down with the cost of waiting. So let's say rates do drop a point, and that reduces your mortgage payment by $500 a month. That would be $6,000 over a year. So you waited to buy, and you're going to pay $6,000 less in interest. Well, the property that you were going to buy is now worth, let's say, $50,000 more a year later. It's still better to buy now, refinance later.
Right, and those are really good points. I mean, I just heard of a situation of a seller who just was stuck on a certain price and their property didn't sell because they were overpriced, but they were hoping to sell and buy something else. And then now their property didn't sell. If it does sell today, the place they want to buy has already appreciated. So, it wasn't worth them waiting. They should have lowered the price and got their home sold so that they could move on.
Exactly right.
So the message here is don't wait.
Don't wait.
Right.
Don't wait. And the market is still appreciating.
Yes.
And so you're just waiting to pay a higher price in the future.
So Bonnie, thank you so much for having this quick Q&A with me. I just want to introduce you or give you an opportunity if somebody is looking for a mortgage, a buyer, where do they go to find you?
Yeah, I'm happy to answer questions anytime. You can Google me, Bonnie Marlette, Edwards Mortgage. I'll pop up if you look for me, Bonnie IE.
Perfect. And if you guys have questions about real estate, please feel free to reach out to me. I'm always happy to answer any questions.